Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on in the stock market today? It's actually down a little bit. Down about 200 on the Dow. Nothing serious, but we had those big up days. 700 points, 800 points. Those were two big up days back to back. Called a relief rally. Called a short squeeze. Called a bear market rally. So what caused that though? Who was buying all of the debt? The debt was just being bought up. The bonds, which is the debt, was being bought like crazy. And not just any debt. The junk debt was being bought. I think it was the Federal Reserve. That's just my opinion. Now some people say the Fed is already starting to pivot. Well, they're kind of doing a half pivot. They're raising rates. But I tell you, they're still buying this debt. I don't think anyone else has the power to buy that much debt in 2 days. They had this emergency meeting on Monday, and all of a sudden the debt market starts to get bought. Coincidence? I don't think so. Maybe it is. Maybe it is. All right. So do I think this relief rally has more to go? Do I think it will run up higher? Yeah, I do. I actually do. Here's the thing. Here's what I look at. You don't know for sure, right? So we've overtaken the 10-day moving average. Now we're moving up to the 20-day. And soon we'll be at the 50-day. Now, here's what I look at. We were at basically 430 on the SPY. And then we had that big drop down, and we dropped down to 360, right? So that's 70 points. Now I look for a 50% retracement. 430, 360, 70 points. So that 70 points, half of that's 35 points. So 360 plus 35 points puts us at 395. Where exactly is that? Well, that's right where the 50-day moving average is. I think we can go up to the 50-day moving average before we get another leg down. Now, a lot of people are saying, hey, the market, the bottom was just put in. And it's possible. It's possible. I don't believe it, though. I don't believe that was the bottom. Now, if we get above the 50-day and above the 200-day, then yeah, we have to go back and relook at it. Now, if we fall below the 10-day, well, this short covering rally came to an end. But I think the 10-day is going to hold. I think we're going to get above the 20-day. And I think we're going to push up towards the 50-day. That's just my take. But this little pivot that the Fed's doing already, they pivoted in England, right? The Bank of England, they started QE program again. We're going to start QE programs again. Crazy, right? They're just going to inflate. Inflate is a lot better than a crash. They like slow pain. A crash would be fast pain. So that's what my take is on the stock market. Let's move over to the real estate market. Now, the real estate market's always fascinating, Now, we're crashing at a rate faster than we did in 2008. Now, to me, this kind of makes sense, right? The Fed, well, they're just crushing the purchasing power. They are raising rates, right? Rates are going up. I look at mortgages, 7% you have to pay, and that's if you got a good credit score. You got a bad credit score, you're going to have to pay close to 8%. Now, so that's just crushing the purchasing power. But the thing is that this is crashing faster than in '08. Now, why is that? Well, it's because it went up faster than 2008. Now, from 2004 to 2006, the market had this big upswing in the housing market, 30%. But we topped that. In the last, from 2020 to 2022, we got a 40% increase. Now, 40% in 2 years, not sustainable, right? So the market's got to come back in, and it's coming back in at a very fast rate. Now, this is the fastest rate, faster than 2008, right? The fastest rate on recorded history. But you see, here's the thing. The reports that they got, right? The reports they have, they're already 3 months old. Look at real estate is on a delay. If I put my house up for sale today, right? And let's say it took me 30 days just to find the buyer, which would be relatively quick in this market. The buyers are going away. A lot of buyers are starting to disappear. But let's say I found one in 30 days, right? And let's say it takes another 30 days to get, all closed, all the reports done and closed and out of escrow. And then another couple of weeks, they'll finally figure it out in the tax records and they'll report it. So it's got like a 2.5 month lag. So 2.5 months ago is this information we're getting now. And the information we're getting now tells us that we're going down at the fastest rate in recorded history. But it's worse than that because they don't have the information from the last 2.5 months. And as a real estate broker, I kind of get the inside track a little bit. It's not getting better. It's getting much worse. So we are really in big trouble in the real estate market. Now, I love the National Association of Realtors, and they are. See, I get to read all their reports, right? Now, okay, so they come out with this report that the typical home buyer has lost $107,000 of purchasing power. Well, of course, they have. The rates went up. You're going to lose purchasing power. But that's just the average guy. So the average house, about $440,000 at its peak, it's going to come down about $100,000 at least. I think it's going to come down a lot more. That's just what they lost so far. But they say that this is causing an affordability problem. An affordability problem. Okay, well, I love the National Association of Realtors because they say an affordability problem is really good. It's really good for real estate. It's always good for real estate. Always a good time to buy. But what the affordability problem is going to do is going to make the buyers and sellers come together. They know that the buyers can't come up because they're tapped out. They can only qualify for so much. So the sellers, yes, the sellers will adjust their house accordingly. So the prices are going to come down, and I believe the prices will come down. Now, this is not unique to the United States. This is a worldwide problem, right? We're a lot better off than a lot of places. You go over to England. Look at they got these. They're 25-year loans, but they adjust every 2 to 5 years. So now they're having these adjustments on their loans. So their mortgage was, they were paying 3% 2 years ago, and now it's adjusting. It's adjusting to 7%. Same with Canada. Canada does not have the 30-year fixed rate mortgages that we have here. Australia, same situation. I'm not completely sure on Australia. I know they have a lot of adjustables, but they don't have the 30-year rate. The 30-year rate loans, they're kind of unique to the United States. Now, a lot of places, they don't even give you loans. You got to put down 50% just to get into the property. So the United States is actually a little bit better than some of these other countries that are already in free fall. I mean, it's like Armageddon in these countries. The housing market is just come tumbling down. And I don't think it's going to stop anytime soon. Now, everybody says, Mike, it's going to be okay this time. The Fed's going to pivot and they're going to bring the rates right back down. I don't think so. Now, do I think they're going to raise them up much higher? I don't think they can. They can't get much higher. You see, they're big talkers, right? They're all talk, but what are they really doing? We're at 3% on the Fed funds rate, 3.25 maybe. I mean, historically that's low, but they can't get it up to 4%. You know why they can't get it up to 4%? Because the U.S. cannot afford our debt payment. Then think about that. I think we just clicked over to 31 trillion. Just clicked over another trillion. What's another trillion? We're going to put those student loans on there. Get another trillion, 32 trillion, 33, 34, 35. It's not going to stop. We're going to get that up to 50 trillion. Where does it get dangerous? I think it's already very dangerous. But the thing is, if the Fed raises rates much above this 3%, they say they want to get them up to 4.5%. 4.5%. Do you know what the interest payment would be on 31 trillion? Well, it'd be about $1.35 trillion a year. 1.35 trillion, really? We can't afford that. We only bring in about 3 trillion in taxes. 1.35 trillion just goes to pay that? No, we're going to keep hyperinflating, keep printing the money. Food's going to keep going up. Gas is going to keep going up. You don't mind paying $10, $15 a gallon, do you? A lot of people are going to be upset about that. Okay, what else is happening? Well, we're going into the recession now. The recession, what does that mean? Well, it means people are going to get laid off. When they get laid off, what do they not do? Well, they don't buy houses. What do? They sell their house because they can't make the mortgage payment. So more houses are going to be coming onto the market. This inventory starting to spike, already up 200% in some areas. In some areas, it's up 400%. Now, of course, not in your area. Your area, nobody sells their house. They just stay there forever. I get that, and that's good. That's good. If people want to buy in your area, the price goes up. I'm just making fun of you. Look at the house market. It's got a problem. It's got a problem. We're starting to crash, but we're early. We're early in the game. This is the first or second inning. Very early, very early. This is going to take a lot of time to play out. Probably, I'd go 12 to 18 months from now. Oh, there's going to be some bargains out there. I mean, just be patient. If you're patient, you're going to be rewarded. If you're looking to buy a house, I'm a broker. It's my job to sell somebody a house. I try to talk them out of it, but they wanted to buy. So they bought. Okay, they went ahead and bought. I think they're going to regret that purchase. Did it in San Jose. It was a beautiful home, but I don't think they're going to be that happy a year from now. And of course, who gets blamed? Well, the dumb realtor that sold it to him. Of course, it's his fault when the price goes down. But hey, I made him sign a piece of paper going, look at market conditions. It could get cut in half. 50%. That's right. 50%. That's what I make my clients sign. I don't want them to buy right now if they don't have to. Now, a lot of people have to. They get relocated. They get divorced. They got to sell. They want to buy. There's always activity in the real estate market, but it has slowed down a lot. It's coming to a grind in my area. It's down almost 50% on activity. On transactions are down. Well, they're down over 40%. Not quite 50%, but that's a big down move. Look at so many realtors out there are starting to feel the pain. As a matter of fact, a lot of them are already declaring bankruptcy. Oh, it's just scary out there, but I don't want scary. It's a Wednesday. We're in the middle of the week. If you like this stuff, give me the thumbs up. Why not? Get out there, everybody. Have a great Wednesday. I want to talk to you again real soon. So punch the subscribe button. You can do it. Get out there. Bye-bye now.